For every company, it's certainly a little bit different. It's split up between China and Mexico, where the denim is made. You can say it's a little bit half of each. But overall, what retailers can do and what brands can do to offset these tariffs, they diversify sourcing. They share the tariff cost with the manufacturers. And what no one wants to do is pass on price increases to the end consumer. So that's what the here and now is. And that's why retailers and manufacturers' stock prices are getting hurt today.
How bad the impact is it still going to be with earnings coming down? Lots of the retailers on recent earnings calls have been talking about the impact from China. Is it incrementally worse across the broad spectrum or just stock specific for Mexico?
I think it'll be incrementally worse for apparel retailers. I mean, we've heard of companies over the years, whether it's T-shirts or whether it's denim, everyone wants fast speed to market. Mexico has been able to deliver that in certain parts, and as a result, there's only so far you can keep diversifying. And diversifying sourcing, it takes time to be able to do that. There's a reason why companies source where they do, the expertise and the speed. So it's just another thing where May has been weak. We need to get, and the consumer certainly feels healthy, but retailers are pushing out earnings. It's a back half year, and how much of a back half year will be the question.
So Dana, when you talk about sourcing, I would assume that soft lines are easier than hard lines to source. But take me one step further. Where do I look at retail? Do I look at the winners, which has been Ross Stores, TJ Maxx, Ollie's, that benefit from the over inventory, that benefit actually from the trade skirmish, the trade war that we're having right now? Or do I wait for the rebound effect from the ones that have not worked?
So I think overall, when you think about value, what works, value and convenience, I think those off prices that you just mentioned, they've had some of the strongest same-store sales, and they've had both women's and men's apparel, particularly at TJX, doing well for them. So I think you're still going to see those off prices outperform. And the reason why is because the extra inventory, as you mentioned, their prices always come down a bit. Access to better goods, access to more goods, they buy right. It's a win for the off pricers.
Dana, do you think that it's already in some of these retail names that we could go to the next tranche of imports from China, another 25% tariffs on the $300 billion imports left, which do affect a lot of them, like with apparel and footwear?
I think if the next 25% come, I think there's still probably a little bit of another round down. And the reason why, earnings estimates will be reduced again. A lot of these companies, they don't have the next round or that fourth tranche put in their numbers yet.